Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies' SOFI stock and why it could surge by around 30% before the end of 2022. Then we're going to talk about and compare the PLTR stock from Palantir Technologies to Amazon's AMZN stock to determine which one is a better buy given the current stock market environment. So we will be comparing those two very different companies, but the analysis is of course very good. Then we're going to talk about the latest news updates and developments with Tesla's TSLA stock and why some investors as well as analysts have become very negative and bearish on Tesla considering the current environment that we are finding ourselves in today. And then lastly, we're going to talk about another EV manufacturer, which is MULN Automotive, ticker symbol MULN, because they recently hired a load of new employees to bolster future company growth. Also, I want to say that if you haven't signed up for Webull yet, which is a brokerage similar to Robinhood, you could win up to $12,000 of free stocks. And if you invest $100 into any stock that you want, I personally would put my $100 into VOO. They're going to give you 6 free stocks. So worst case scenario, you could always invest $100 into VOO, you get 6 free stocks, and you could liquidate your stock in your entire position 30 days after. So if you're interested in either winning $12,000 or 6 free stocks, go down to the link in the description, click the Webull link, sign up, invest at $100, get those 6 free stocks, because this is literally just free money. But without further ado, let's continue. So with that being said, remember to go and smash that like button right now for more videos like this one, subscribe if you are new, and without further ado, let's just jump right into today's stories. Sofi Technologies is a fintech company or a financial technology company that offers an all-in-one inclusive digital app to their customers, which gives them access to anything they could possibly or probably need in terms of financial services and or financial products. Sofi Technologies is a rapidly developing fintech company, and they are just trading above their book value. So right now, the SOFI stock price now trades for just 1.1 times their book value, and we will go into detail about why that is so important and why some investors may want to take a second look at the SOFI stock price if they don't have shares already. So as you know, I did a previous video talking about their first quarter earnings report, which came out around May 10th, and this gave us insight into the company of how they are growing their members and growing their revenues, and have experienced a large increase in their adjusted EBITDA, which is earnings before interest, tax, depreciation, and amortization. Also, the company reported an increase in its book value, which will be the main subject for Sofi Technologies today, which makes the SOFI stock price a very good buying opportunity right now. But what do I mean by this? So right now, Sofi Technologies' market cap or market capitalization is around $5.78 billion because the current stock price is currently hovering at around $7.24. However, the book value of the company is valued at $5.211 billion. So the SOFI stock price trades for just 1.1 times their book value, which is very cheap, which means that if you are a value investor or even a long-term growth investor, right now could be a fantastic opportunity to buy the SOFI stock price. And that's actually what we've seen their CEO as well as other directors and insiders doing. They are buying more of the company that they are running, which is always good news to see, but we covered that in last video. However, with this being said, don't forget to practice proper risk management and don't overexpose yourself too much to just one single growth company such as Sofi Technologies, because there are a plethora of other fantastic buying opportunities on the stock market right now, especially as it continues to go lower. However, this does beg the question, what is book value? Well, Investopedia defines it as the theoretical amount of money that would be paid to shareholders if the company was liquidated and paid off all of its liabilities. As a result, the book value equals the difference between a company's total assets and total liabilities. So again, from a risk management standpoint, this is very good, which means that if you're investing into the SOFI stock, you are taking on substantially less risk, because even if they had to liquidate everything and they went out of business, you are still going to get a large amount of money back as a shareholder. Also, with such a high book value, this would also mean that the current stock price is trading at a phenomenal discount, which we will talk about right now. So in their recent earnings report, like we said earlier, they had very strong revenue and EBITDA, and for their quarter 2, they are anticipated to increase their revenues substantially yet again. Although I don't think their quarter 2 2022 will be as promising as their quarter one was, their quarter two results are still going to be somewhat impressive because they have EBITDA guidance of around $5 million to $15 million, and they also anticipate that their book value will grow significantly for quarter two as well as the full year of 2022. So this is absolutely fantastic. So if their shareholders' equity grows by around 5% for the next 3 quarters, that puts the book value at just over $6 billion. This means if the market raises its price to book value to 1.25 times by the end of 2022, that puts Sofi at a market cap of around $7.54 billion, which would equate to a 30% increase in the SOFI stock price. So this means that the current stock price of around $7.20, give or take a few cents here or there, is going to increase to around $9.43 per share. And this is set to happen before the end of 2022. Of course, in 2023, we're going to see their revenue scale very rapidly, and in 2024, they are supposed to become profitable. So clearly, things are looking very bright and bullish for Sofi Technologies. With that being said, let's talk about Palantir Technologies and Amazon, and to see how they compare and which one we should buy in the current stock market environment. So Palantir Technologies, ticker symbol PLTR, is a big data and analytics company that serves both commercial clients as well as government enterprises. Also, Amazon, as you know, is a giant e-commerce company, and they also have a huge cloud-based platform, among many other things, because Amazon owns a plethora of various businesses, and their ticker symbol is AMZN. However, both of these companies hit all-time highs last year, but both of them have also absolutely crashed their stock price. So what do I mean by this? Well, Palantir's PLTR stock started at around $10 when they DPO'd, and then it soared to around $39 last January. Then it crashed down to around $8 per share. Amazon likewise hit an all-time high of around $3,731.41 last July. However, recently the stock has tumbled at or even below $2,200. So because both of these phenomenal growth companies have crashed, which one is the better buy? How does Palantir stack up against Amazon, even though, yes, I understand that they are radically different companies, and this is clearly not a one-to-one comparison. However, over the last 3 quarters, Palantir has increased their commercial business and revenues extremely rapidly at an impressive rate. However, on the other hand, their government business has been dragging their feet, and new competition is brewing, as well as a new threat of the US government internally creating alternatives to Palantir's technology. So this, along with other macroeconomic factors, has sent the PLTR stock price absolutely plummeting, but this could be a good buying opportunity as long as you don't overexpose yourself too much to this single speculative stock. On the good news, Palantir, like we said earlier, is scaling their revenues extremely efficiently. They increased their revenue by around 47% to $1.09 billion in 2020, and then it grew by around 41% again for 2021 to $1.54 billion, and they are anticipated to beat that yet again because management projects and forecasts a 30% revenue growth rate from now until 2025. Now, the bearish negative side of this is that Palantir's business, while it is growing and expanding and increasing their revenues, they are experiencing slower growth rates and shrinking margins, and they are not profitable on a generally accepted accounting principles basis, which I completely agree with, but they are projected and forecasted to become profitable in 2025. It also doesn't help that macroeconomic headwinds has done damage to the stock, especially in a time where growth stocks have already been liquidated by investors, because yes, Palantir is a very risky stock play because we don't really know the future, unlike Amazon is more of a blue chip, safer company to invest in. Amazon generates most of its revenue, unsurprisingly, from its e-commerce business. However, they actually generate most of their profits from their Amazon Web Services, also known as AWS, which is the largest cloud infrastructure platform in the entire world. However, despite this, the stock has plummeted extremely dramatically, which again gives us a fantastic buying opportunity, especially for a powerhouse powerhouse blue chip stock such as Amazon. So let's see what Amazon is offering investors right now. Clearly, their AWS is still the market leader, and they're generating around 30% growth in their revenues quarter over quarter, which is absolutely insane. Now, on the more bearish negative end, Palantir stock trades at around 43 times their forward earnings and 9 times their sales. And if we compare that to a more comparable stock like Twilio, which again I am a huge fan of, that is also increasing their revenues organically by around 30%, very similar to Palantir Technologies, they are trading at just 5 times this year's sales. But even with that being said, Amazon trades around a 42 times forward earnings, very similar to Palantir. Palantir is only 43 times their forward earnings, but they're only trading at 2 times this year's sales. But with that being said, how do these two compare, and where should we put our money considering the current stock market environment? Well, considering that Palantir is a very risky growth stock and Amazon is a safer blue chip stock, I'm just going to have to go with Amazon based off of the risk management that we would be adding to our portfolios. I do think Palantir has a very bright future, and I am a Palantir bull. However, waiting for the stock price to even tumble lower if possible is going to be your best bet, and because the current stock market is very volatile right now, if you want to add safety and future stock price appreciation to your portfolio, Amazon stock is going to be where it's at, while if you want to take on a more risky long-term investment, then Palantir is clearly going to be the stock for you. So I'd love to hear your thoughts down below, which leads us to Tesla, another fantastic company. If you didn't know, Tesla is a electric vehicle manufacturer, and they do a plethora of other things. However, the reason why Tesla is in the news is because some Tesla bulls are starting to be less bullish, which means they're not as positive on the stock anymore. And the one I want to highlight is Dan Ives, which again is one of our favorite analysts on this channel. So Webull, which is the company Dan Ives works for, he's the securities managing director, and he slashed his price target for Tesla's TSLA stock down from $1,400 to $1,000. However, he does maintain his outperform rating. He says, and I quote, "The success of the China story on both the supply and demand side are the linchpins to our long-term bull thesis in Tesla." He goes on to say, "That said, the reality is the current Shanghai lockdowns have been an epic disaster so far in the June quarter, and we expect Tesla to see modest delivery softness this quarter with a slower growth trajectory in the key China region into the second half." End quote. So what is he saying? Because of recent lockdowns in China, this is going to negatively impact the amount of vehicles that are going to be sold by Tesla to Chinese customers. Dan Ives goes on to say that he doesn't like how the CEO, who is Elon Musk, is taking his attention somewhat off of Tesla, and he is doing a publicity stunt over for Twitter because he is buying Twitter. So Dan Ives thinks this is more of just a distraction, and he should really just focus on Tesla. He's already running multiple companies, and adding another company is not going to benefit his other companies, but instead hurt them. He also rightfully points out that since Elon Musk has started to get wrapped up in Twitter, the TSLA shares of Tesla have lost around 33% of their value. He goes on to say, and I quote, "While the Twitter situation in theory does not impact the Tesla fundamental story, the distraction risks for Musk are hard to ignore at a time that the Tesla ecosystem has never needed Musk more, with the worst supply chain crisis seen in modern history." End quote. And then lastly, we're going to talk about another electric vehicle company that I do periodic updates on, and that is MULN Automotive's MULN stock. So MULN, if you didn't know, is an emerging electric vehicle maker, and they announced recently that they hired a plethora of new hires to bolster future growth and to help the company develop and manufacture their MULN 5 EV crossover. So they are hiring people in various disciplines such as vehicle engineering, vehicle integration, powertrain systems, and of course manufacturing. So if you look on screen, you can see the engineers that they hired, the manufacturing faculty that they're hiring, and the employees for vehicle integration as well as thermal systems. Now, the CEO actually came out with a statement and said he is happy to announce the addition of these new members to the MULN automotive team. He goes on to say, every new team member is a vital hire and an integral part of our EV programs and a bright future for MULN Automotive. One of our promises from the start has been to put Americans back to work in the US, and I fully intend to see my commitment through. God bless America. So this is extremely patriotic. I actually do agree with him here that we do need more jobs over here in the US, and that's very good. However, as of this time, I have not changed my mind about MULN stock because fundamentally, they're not the best company, especially when it comes to their finances. However, clearly this is a new emerging startup company, so their finances clearly are not going to be in order, but I could change my mind on this company in the future. But as of right now, I think Sofi is a strong buying opportunity, Palantir Technologies is a good holding opportunity, Amazon's a fantastic buying opportunity, and of course Tesla is Tesla. But as for MULN, I do not advocate a buy rating, and I would actually sell the MULN stock because I think the stock price is going to continue to fall even further. But with that being said, I would love to hear your thoughts. Remember to always do your own research. This is not financial advice. These are just my opinions, and I want to keep you all updated with this stock news. So go and smash that like button for more videos like this one. Subscribe if you are new. Comment your thoughts down below, and I will see you in the next YT video.